It's time for our first market update of 2024, and today I'm going to cover interest rates and where they're projected to go, what you can expect as far as home prices, our new county loan limit, and how much more borrowing power you may have. I want to give you all the information needed to set you up as a successful buyer or seller in today's market. Let's get started. Hey there, welcome back to my channel. I'm Erica Monroe. I'm a realtor in the Bay Area and I specialize in Solano County. It's a new year with new opportunities, and I think it's going to be a really interesting one for real estate, a lot of which hinges on what happens with those interest rates. Now, last year we crossed that 8% marker, which was tough. It was the first time we've seen that happen since the year 2000, and luckily rates have come down significantly since then. But I know that they're still higher than a lot of buyers and sellers are hoping for. Right now, on average, my lenders are projecting about 6.5% as an interest rate for a conforming conventional loan. Now, the projection for interest rates that I'm seeing from industry leaders and respected publications is that yes, we will continue to see a softening of interest rates over the course of 2024, but nobody seems to be projecting for a large decrease. Now, we may see a more aggressive softening of rates in 2025, but I want to chat with you in depth about what that really means to be a buyer competing in a very aggressive market. Unless you have extra cash on hand, so more cash than your closing costs and your down payment, you're likely not going to be competitive in an aggressive market. When the interest rates drop, more buyers enter into the pool, and unfortunately, we are projecting for low inventory for the foreseeable future. It's going to be several years before we have enough housing to meet the demand. So that means that most houses will get multiple offers. And with multiple offers, of course, the price point gets driven up because people bid higher and higher. Now, you might think as a buyer, you can just continue to increase that price point and you can simply borrow more from the bank. But unfortunately, it just doesn't work like that. Even if you qualify on paper to borrow more, it's all going to come down to what the house actually appraises for. Anytime you get financing, the bank is going to send out an appraiser. An appraiser is going to establish the value of the house. So often in an aggressive market, meaning homes continue to appreciate each month, it's not uncommon for houses to not appraise for what the buyer is offering. And that's because appraisers have to use recently sold homes. They're using homes that sold within the last 3 months. Well, there's been a lot of appreciation that occurred over those 3 months, and some appraisers will make some corrections. They might give you credit for appreciation, but many don't because they don't want to overvalue properties. And the bank can only utilize the trusted appraiser's value. So if you as a borrower offered more than that, you would have to make up the difference in cash. So if a house appraised for $750,000, but you offered $775,000, you would have to come up with an additional $25,000 in cash to make up the difference. In an aggressive market, sellers don't have to decrease their price points. They're going to have 5 other buyers waiting in the wings that are happy to guarantee those funds. So unless you have extra cash to work with, it's very difficult to be a competitive buyer in an aggressive market. If you are a buyer who just has enough cash for closing costs and down payment, you may in fact get a better deal now, even though interest rates are a little higher. You might not have competition, so you might not have to bid against anybody, and it may be possible for you to ask for some seller credit or some money to buy down the interest rate. Now, if a house just came on market, it's unlikely that you're going to be able to ask for credit, but if a house has been on market for, let's say, 30 to 45 days, you may be able to negotiate a better deal with the seller. In fact, I pulled up all the sales that have occurred in Solano County over the last 30 days. There were 190 homes sold, and 89 of them received some sort of seller credit. Some was just in lieu of repairs, but many had money towards closing costs or money to help buy down the rate. That becomes a lot more affordable, and these concessions just don't exist in an aggressive market. Sellers don't have to give up anything in an aggressive market. So if you were a buyer as described, I would really encourage you to consider getting pre-approved now. That way you're ready to go. It doesn't mean that you have to commit to buying, but you're ready to go because you just never know when that right opportunity is going to come around. So what are houses selling for in Solano County? I'm going to highlight 3 properties in different cities to give you a good idea of what you can expect in today's market. The first is 762 Barton Way in Benicia. Now I did a video tour of this home for you guys last month and it was stunning. It was 4 bedrooms, 2 bath, about 1,900 square feet. It had a beautiful, nice sized backyard. It was listed at $848,000. Now this home had incredible natural light and it had been fully renovated. It had new flooring, new windows, fresh paint, a brand new kitchen. A buyer was able to scoop it up in the first week of coming to market and they offered $2,000 above the listed price. So the home sold for $850,000. In my opinion, the buyer got a great deal because if this house were to come on market during peak season, I guarantee it would have been a bidding war. I also think that the seller fared really well because they commanded more than the listed price. Most sellers on average right now are commanding only 98% of the listed price. The buyer was able to close quickly and they didn't have to give any concessions. That is what I would anticipate for Benicia, by the way, because Benicia, out of all of our cities, tend to have the lowest amount of inventory. So there's a lot of demand for very short supply. Most homes in Benicia, I think, are going to sell right now at list or close to list price with very little concessions, unless it's a fixer or it's a higher price point and it's been sitting on market for a long time. The next house I want to highlight is a beautiful new construction home in Dixon, California. Some of my very lovely clients were able to close on this house at the end of the year. It was Sutton at Park Lane by Richmond American Homes. This was a single story, 3 bedroom, 2 bath, about 2,300 square foot house on a huge 1/4 acre lot. My clients were able to get $22,000 towards closing cost credit to help buy down the interest rate. So they had about a 5.99% interest rate that's fixed for 30 years. Really incredible. They also received another $10,000 in closing cost credit, and that gave them the ability to purchase solar. Because remember, with new construction, you can either lease solar or purchase solar, but you have to do one or the other. So now for the foreseeable future, their utility bills are going to be significantly more affordable. Yes, we got some great incentives for closing out the year, but any new construction developer that has standing inventory or soon to be completed homes are likely going to have some incredible incentives as well. As I always remind you, make sure you take your agent on your first visit to the community. Otherwise, you waive your right to representation. You're not going to have an agent negotiating on your behalf or walking you through the process. And let me tell you, like I mentioned last week, I had some crazy scenarios happen this year. I am a firm believer that if they did not have me representing them, that these contracts would have fallen apart. Had nothing to do with the builder or the homes themselves, but in fact the loan, and they just weren't getting the attention or answers that they needed. I really think now more than ever it makes sense to have an agent to help you through this process. The final property is located in Green Valley, which is a very popular neighborhood of Fairfield. It's a 3 bedroom, 2.5 bath, about 1,800 square foot house on a very modest lot. It was listed at $649,000 and it sold for about $658,000. There was more than one offer and the house did get into contract within the first week. This is a very competitive price point, especially for this area. So I'm not surprised that the home sold for more than it was listed at. And typically in this area, you will see houses sell at list or potentially higher. Over the last 30 days, there were some seller concessions given. In this case, none were given to the buyer, except that the seller had agreed to pay for all of Section 1 work to be done before the close of escrow. So that's typically some dry rot that was treated on the exterior, but that was pretty minimal. It was $520. So buyer got a great deal, seller definitely got a great deal. The moral of the story is you have to have your agent put in the work to help you understand where the house may potentially sell. And you need to make sure that they're having conversations with the listing agent. Anytime my buyers want to make an offer, I always pick up the phone. I always try to get as much information as possible. I want to understand seller expectations so that my buyers can come in strong but not overpay. And as a listing agent, I am always weary of buyer's agents who just submit offers without having conversations. I want to communicate because I think that's best for both parties. I can help them understand the seller's expectations, and at the end of the day, we both reach the same meeting of the minds. We both have the same goal of selling the house, and both will walk away happy and feeling like they got a great deal. Conforming loan limits in Solano County have increased for both conventional and FHA borrowers. I'm not going to get into the definition of a conforming loan or the different loan types. Check out the video above for really thorough information. But for a conventional conforming loan, you can borrow as much as $766,550. And for an FHA loan, you can borrow as much as $685,400. So just to give you an idea of your potential purchasing power, for a conventional buyer, typically you'd put down about 5% as a minimum down payment. There are some loans that allow as little as 3%, but on average I see about 5% for conventional buyers. That means that your purchasing power grows to about $807,000. You would put down 5%, which is roughly $40,000, and you could borrow, if you qualified, up to $766,550. For an FHA borrower, typically your down payment is a minimum of 3.5%. So your purchasing power would increase to about $710,000. 3.5% would be around $24,850. You'd be able to borrow, if you qualified, $685,400, and that would take you to a max purchase price of about $710,000. So that's potentially increased buying power by about $40,000. And hopefully that'll come in handy, especially if you're shopping towards the top end of your budget. If you're thinking about making the move to Solano County, or you have any specific questions about the information I provided today, please feel free to comment below or reach out to me at monroe.erica@gmail.com.